evolution, really interesting. So I remember we had a nice ed tech day sponsored by CFT a few weeks ago, right? And I don't know whether you were able to attend, but then I put up this little picture that shows the development from a baby to a young boy to an adolescent to an adult, right? So I think that depicts really nicely the evolution that we can see in the fintech space. So maybe we started out in baby shoes, but then now I think we're more adolescent. Everything is a little bit more mature. But what I would also caution against is, we're not done yet. It's like a lifelong journey, and we have to continue to grow and to improve so that we can benefit other people, clients, and other institutions along the way. So I think the maturing is really across the whole ecosystem. So, fintech companies grow up, they get more funding, they hire more senior people, and their propositions become stronger, right? But at the same time, the understanding of fintech and innovation in financial institutions made a massive leap, yeah? I think also customers play an interesting role, right? Because you think about it, maybe in 2008, everyone was really wary. If you told me in 2008, oh, there's a new app that can manage your money, and very careful, right? We're just in the midst of the financial crisis. I think people are now very open to explore alternative means of financial services. So I think it comes from all different angles that the ecosystem has become a little bit more mature. So I continue to be super excited about two things. One is blockchain. So you look at platforms like Algorand and Tezos that can enable tokenization of securities on the one side, but then also the building of very inclusive financial services propositions and utility tokens. I think that's one exciting area. The second exciting area is democratization of machine learning for investment management. And that is something that Marcos Lopez de Prado and Igor Halperin are pushing forward with their recent publications. So these are the two things that I think I'm really excited about. So maybe my answer to that is a bit off. I would not invest in any fintech company right now. I think 2020 is the year where we have to actually start to use fintech company products and perhaps take some of the money that we have in our bank account to explore how we can use them. So if you're a retail investor, why don't you use a robo-advisor like StashAway to park some of your money? If you're a private bank, why don't you include a digital asset custody proposition like Hex Trust based out of Hong Kong into your ecosystem? And if you're ultra high net worth yourself, have you opened a bank account with Swiss-based Signum that can offer you digital asset services? So these are more the interesting things, right? Start to use the products rather than invest in the companies. I guess most of the people, if you ask them, will say JP Morgan, and they certainly do a lot of interesting things. But because I'm based in Asia, I'm most excited about Union Bank of the Philippines. And under leadership of Tito Ortiz, what they've done is they've created a financial inclusion process based on blockchain to include many of the rural banks and help with that communication. So that is amazing. I think the most recent thing that they've done is they've hired ex-chief data officer from the MAS, David Hardoon, to support on the machine learning and data side of things. So really forward-looking institution that is trying to leverage technology. I remember Tito was telling me one day that he's got his executive management team to build robots just to create the sensitivity among the senior leadership team. I mean, where else could you find that? It's very, very exciting. Okay, so earlier we spoke about Python. So Python, yes, very important. The ability to write smart contracts on Tezos blockchain, for example, will also be important. But I think I have three things that are absolutely key. The first one is you have to understand the regulation of the part of finance that you're working in. Second, you have to be very resilient as a person. These are difficult times. I don't know when it's going to improve, but let's get ready for the worst. So resiliency, extremely important. And lastly, and this is where many fintech companies struggle, you have to understand the economics of the business model, of the part of the financial services ecosystem that you're trying to work on, right? Many companies, lots of focus on design, lots of focus on technology, don't understand the economics. So that's the third one.